Alright, good morning. Let's go over today's trade plan. So in the overnight session, we got a rejection and failure at 1764, and sellers ended up pushing ES down to new lows below yesterday's low, and that itself signals some buyer weakness in the market. Now, heading into the open, we have the micro bull bear zone, 59.75 to 61.75, and short term, sellers are in control below that area. Bigger picture, the bull bear zone remains at 47.5 to 50.5, and buyers can be active there, and holding above it would tell us that, bigger picture, buyers are still in control. The main downside objective is the 54.75 gap fill and a test of the 52.5 to 54.5 support. The main economic catalyst is the ISM non-manufacturing index at 9 a.m. Central, and the idea in the first 30 minutes is that ES could just remain range bound between initial support and the micro bull bear zone. And then once the econ's out of the way, then perhaps we can get some more directional conviction and expand the range in one direction or the other. Now on the downside, the 52.5 to 54.5 can still attract responsive buyers on first test. We do have to be a bit careful there because, short term, below the 59.75, below the 58.5, sellers are in control, and we could get a bit of an extended push to the downside before the market attracts responsive buyers. The main zone on the downside as far as support goes is that 47.5 to 50.5, and that's really the key area that buyers have to hold in order to get price back up towards the 58s and then the micro bull bear zone and potentially higher. So the main inflection point on the downside is 47.5 to 50.5. If we break below that, and if we do so on some decent volume with the real-time context also being quite weak, which given the prior close at 1763, if we head down to the bull bear zone, the internal should be quite weak. If we break below the bull bear zone, below 47.5, and then start holding below it, that could end up getting some more liquidation in the market and take ES lower down to 40.75 to 43.25. And if it's a strong liquidation, which is not the expected scenario, but in the event that that happens, even 36 to 38, would not be out of the question. But given the overall context, it seems like the bull bear zone should hold, and even initial support has potential to hold as support here, with buyers entering and pushing price back up towards 58.5, 59.75 to 61.75. Now, on the upside, a break above 59.75 to 61.75 would be the first sign that we're getting some strong buyers in the market. The next inflection point is the 64 to 66, and that's a pretty key area. And given the overnight weakness, we could get some rotation there first test. But then if we can break through 64 to 66, that would confirm initiative buyers active in the market, and we could get a move up to the 70.5 to 72.5 zone. So right now the market is still trading within a range. It's still a balanced market overall. And that's why, any pushes down to the other side of the balance, which is basically the bull bear zone, or even initial support, we can expect some buying to come in the market. And then as price pushes higher, we can expect some selling to come into the market. So, off the open, not looking to be overly active. Probably let the econ report get out of the way before we get more active in the market. Expecting it to chop in the first 30 minutes. So, if we get a kind of a short-term exhaustion type move down into initial support, then that could be a long setup to consider. If we get a more of an extended move ahead of econ down to bull bear zone, that would be a good long setup to consider. And on the upside, first test of 59.75 to 61.75 is a potential short. And I'm not expecting that zone to be taken out ahead of the econ report, but in the event that it is, then 64 to 66 would also be a good short setup in the first 30 minutes. We want to be conservative in the first 30 minutes. Only get in if we're getting really good trade location. 58.5 is another potential inflection point, and that's a level we can also lean against as far as shorting the market. But just know that on the downside, because we're in a balanced market, you may only get a move down to 52.5, and then if buyers step in there, that could be the end of the move. So right now, since we're in a balanced market, we don't know, right? Is it going to break the balance or not? We don't know that yet. Based on the signs that are in the market right now, it doesn't seem like we're going to have a liquidation day today. It seems like we're going to hold the bull bear zone on the downside, balance a bit, and then slowly start, making our way back up. But, we are open to a downside move if, the price action in real time continues to be weak and we see signs that, that scenario is in play, then we're open to it, but that's not the main scenario that we're focused on right now. The main scenario is still that ES will continue to stay in the recent balance, the bull bear zone will hold, potential for initial support to hold, and then rotations back up towards the micro bull bear zone and the initial resistance zone. So let's see how the first 30 minutes play out. Let's see what kind of reaction we get off the econ report, and then take it from there.